Hi, I'm Kals, host of The Comparable, the series that looks at two businesses building similarly in two different emerging markets. For this episode 8, we're actually bringing back what we're calling the Comparable Compact, which are our minisodes where I get to sit down with an investor who I respect and admire, who's also operating across emerging markets. We did this, if you listen to the series, for episode 6 with Alex Lazaro of Fluent Ventures. And I'm really excited for this episode to sit down with a friend of mine, Dina el-Shenoufy. She is the co-founder and general partner of F6 Ventures, which is part of this new rebrand. It's part of this newly formed F6 group, which houses both F6 Ventures and also Flat6 Labs. And Flat6 Labs has been a player in the Middle East startup ecosystem, especially coming from Egypt outwards since 2011. And I think Dina has really been a driving force of that, of being part of the early team that was building outwards. And she's a friend of mine. We've been we're in the same Kauffman Fellowship together, in the same forum together, for those who know what that means. So we get to speak to each other quite a lot. And I think there's so many interesting learnings, especially being an investor that's been operating in Pakistan. And I've long thought that Egypt and Pakistan are very, very, there's almost like twin flames in terms of the similarities between the markets, both in terms of its challenges, but also in terms of its entrepreneurial talent and its opportunities. And not to age myself, but for those who know, I've been operating the Pakistani startup space for about 15 years now, first with being a startup ecosystem player that was actually very similar to Flat6 Labs. And I actually remember meeting one of the co-founders of Flat6, I want to say almost 15 years ago now, in San Francisco. We were at a dinner that Stripe brought people together that were ecosystem builders in emerging markets. And I remember meeting them then and seeing, there was just so much of our DNA that was quite similar. And so then it felt very full circle for, I've met a few of the Flat6 and F6 team in the years that followed, and just have always felt such a deep kinship with them. And I've really loved how they've thought about things, how they've thought about the fact that Egypt is really kind of at this really interesting vantage point in terms of being both part of the African continent, but also part of the Middle East. And so we get into that and all that and more with Dina as we talk through, how F6 Ventures is thinking about things now, her lessons, having been an investor, in the Middle East and with over 20 years of experience, but also looking at Africa and really thinking through, how you deal with challenges that, Egypt has seen, which is actually quite similar to Pakistan, which is also, quite similar to other emerging markets that have faced macro challenges, and how founders have stayed resilient in the face of that, and how, you kind of have to adjust and as an investor also have to meet your entrepreneurs where they are, which is something that we've experienced a lot at iDive Ventures. So excited for you to meet her, for you to hear some of her really exciting and interesting insights. So let's get into it. Hi, my guest today on our second Comparable Compact, which is our minisode with other investors, is Dina el-Shenoufy, co-founder and general partner at F6 Ventures, which is part of the newly formed F6 group that houses both this fund, F6 Ventures, and also Flat6 Labs, which Flat6 Labs has been a player in the Middle East startup ecosystem since 2011. Dina joined Flat6 in its early days and has over 20 years of experience across venture capital, private equity, and asset management. She has played a major role in expanding Flat6 Labs from Egypt to 7 countries across the region, investing in over 300 startups with over $90 million in assets under management. She's also a friend of mine, and we happen to be Kauffman Class Fellows, so I'm super excited to have her here. So welcome, Dina.
Thank you so much, Kaz. Lovely being here.
I think what's cool is this is timed pretty well. In August, your firm Flat6 announced a new chapter in your evolution and a rebrand in your 14-year journey. The F6 group, anchored by F6 Ventures, which is a seed stage investment firm that you're running, and Flat6 Labs, a regional startup accelerator program that, as I mentioned, has been operating in the Middle East region since 2011. I'd love to understand first, for people that may not know, the impetus behind this new look, the rebrand, and how it represents the culmination of all your years of investing and being in the region.
So I think in many ways, this restructure is just going back to why we started it all. When we started Flat6 Labs 14 years ago, the whole notion was, how do we do seed investments in very, very nascent markets? And at the time, we realized that it was very difficult to just give founders the cash without the support. And it had to be support that is very, very structured and very, very basic in many ways. It wasn't sort of growth portfolio management. It was a very different kind of portfolio management, which didn't even focus on just the product. It focused on the founder. And I always say, when we started Flatix Labs in 2011, the average age of our founder that we invested in was, I would say, 22, 23, 24. Right now, these were fresh grads, predominantly computer science grads or engineering grads. They knew how to build a product. They had no clue how to go about running a company. And so the program was super integral to why we created Flatix Labs, but it was super integral from an investment perspective. Now, over the past 14 years, two things happened. One, it became very apparent that this is a much needed sort of structure across the entire region in terms of the Middle East and North Africa. But then the program itself became sort of, it took a life of its own, and it grew so much. And Flatix Labs actually, I think, across the years became a lot more synonymous with the program and the impact and sort of the ecosystem building, which in many ways we had to do because no one else was doing. And we were the first interface into entrepreneurship, like sort of being the pre-seed and seed. And we used to do checks even before angels, which is sort of inverted to what everything else is around the world. Like angels would come in, and then the seed investors would come in. But in 99% of the transactions we did, angels would invest after Flatix Labs. And so in many ways, Flatix Labs was suddenly burdened with creating the ecosystem. Just for us to actually survive as investors, we also had to create the ecosystem. And I think 14 years on, we said, fine. I mean, Flatix Labs then became so synonymous with that overall entrepreneurship platform as a brand. We'll keep that, but we sort of came full circle to say, fine, let's take out the investment again and go back to what we wanted to do, which is fund management investments. And I think it was also from a corporate governance perspective, much better this way to sort of say, the investment is completely independent from the program. It used to be like back 14 years ago when the markets were so nascent that one can't exist without the other. But now we can sort of decouple them again to say the investment thesis, the investment mandate can have a program. It doesn't need to. So that's it. It's exciting moments. I feel I've come full circle. I've started Flatix Labs to invest, and now I'm doing F6 Ventures also to invest.
So yeah, because you came from Sawari, right? And the founders of Sawari started Flatix. So it's like a full 180 for you, or 360 for you. And it's interesting. I was smiling a lot because with my experience in Pakistan, first starting an accelerator, then becoming an investor, it's the exact same experience. Yeah. So I feel like our ecosystems, and our ecosystems have gone through similar evolutions, right? Where it's like, even what you said about the average age of founders, like we've seen much like more the average age go up, but also the sophistication of founders in our ecosystem in Pakistan increase so significantly, which I'm sure you've seen in Egypt as well.
Absolutely, because I mean, now in the last two cohorts of our Egypt fund, the median age for founders was closer to 30, somewhere between 30 to 35. Now that's a massive jump, and they were professionals. They've had 10 years of experience. They knew the business inside out, and so actually the program, while relevant for some, at some point was no longer relevant. I mean, we used to believe that it is doing seed investments in our region was synonymous to always being through a program. And now it isn't that much because the entire ecosystem developed. And so the program isn't a must as much as it was before. So no, it's exciting. I think in many ways, as you said, I think the creation of F6 Ventures is also a reflection on sort of the Middle East journey and sort of maturity of the overall ecosystem as well.
Yeah. And I want to talk about that, right? Because, F6 started launching seed funds back in 2021, like in terms of kind of expanding outwards. You went to markets like Jordan. You're still deploying from a fund in Saudi Arabia, from what I can see, UAE. And then you started also expanding into Africa in 2023. And I feel like Egypt is such an interesting place in the market because you guys have this vantage point that you're both part of the African continent, but also part of the Middle East. And so it gives you like a sense of both that you could kind of decide, which way you're leaning. But I'm curious because, all of these markets are not monolithic at all. They're so different from each other. And you know this, right? So much better than I do. Like the Levant and GCC are so different from each other, so different from North Africa. Obviously, North Africa is so different from the rest of the continent. And within that, there's so much nuance. And I'm curious about what you've learned in this process of like what can be transferred and also what can't be transferred, both from like an investment lens, but also when you've seen startups try to expand, like what have you seen that works in terms of transferability and also what doesn't work?
Yeah. So look, I think there's been a lot of lessons learned for us in Flat6 Labs and then going into F6 Ventures. I think in many ways, this is sort of F6 Ventures comes to with that wealth of knowledge and lessons learned. I think maybe the only correction is that we started institutional funds and we started expanding out of Egypt as soon as 2013. And so in 2013, 2013 was our first expansion into Saudi Arabia. And so 2 years into starting Flat6 Labs, we expanded into Saudi Arabia. And in all fairness, all expansions all the way back then were largely sort of coincidental and serendipitous. And so we met by coincidence our partner in Saudi Arabia, and this was our first venture outside of Egypt. And it was sort of a management contract, not a fund management contract. And they said, we like the know-how, we think we need it. We just want you guys to sort of transfer knowledge, but the investments are all happening in Saudi and managed by us. And then we said, okay, this worked, but if we lend our brand to such a project, then we have to be a lot more control with the investment so that we can sort of attribute the track record. And so as investors, that made us realize that, okay, fine, if we'll expand, that might not be the best way to expand. And so we did Abu Dhabi a year later. And Abu Dhabi started out as a fund, but then we also had a lesson learned in Abu Dhabi, because what we did with Abu Dhabi, Kaz, is that we had too small of a first closing just because we were in a rush to get to the market. But what it meant is that it didn't give us the right runway to sort of have further fundraising towards a second close and to sort of give us that fund viability. It's another naive thing that we've done. And so we've started expanding super early. I think what we did after having those two experiences that we said, okay, let's stop, let's focus internally, let's build the track record. And then starting 2017 is when we actually started our institutional funds. The first was in Egypt through with sort of the IFC anchoring it. But then we also closed our Tunisia fund in 2017. And that was our second proper institutional fund. And we actually had Beirut as well, end of 2017, before like sort of things collapsed massively there as well. And then there was another wave of expansions where we went back to those early markets of Abu Dhabi and Saudi with sort of our lessons learned and started those bigger funds. But you're right. I think the market is, in many ways, we call it the Middle East, but it isn't as sort of uniform as people think. The dialects differ like massively from one country to the other. The culture is very different. Consumer behavior is very different. Tech adoption is very different. Purchasing powers are very different. So Saudi versus Egypt are two completely different markets. But even Saudi versus the UAE are two very different markets. However, there's a lot of commonalities nonetheless. Right now, it could be that the dialect is different, but the core language is there. With sort of borders becoming and people traveling a lot more, it's becoming a lot easier for a company coming out of Egypt to expand to Saudi and the UAE. Having said that, the issue is not just the culture, it's who are you serving. Right now, I always say Egypt, you say, has an advantage whereby it's part of Africa, but then it's also part of the Middle East. But it's also part of a very strong Egyptian sort of identity crisis, right? Are we African? Are we Middle Eastern? And even I think the average Egyptian always has that, like, are we African? Are we Middle Eastern? Are we neither? It's but if you think of it, a product coming out of Egypt is more likely to serve a market in Nairobi, Lagos, or even in I don't know, Karachi, than it is to serve an individual in Saudi or in the UAE, right? Because these markets tend to have a very different profile in terms of what they need and what the opportunities are.
And also purchasing power, right? Is so
and
different.
Exactly, right? and so that was the first lesson learned. And I think that was sort of the impetus of why we said we want to do the Africa Fund. And we actually decided to have Egypt as part of the Africa Fund rather than the Middle East Fund. The idea was we see a lot more of synergies in taking a company to Nairobi and vice versa, bringing a company from Nairobi to Egypt than it is about taking a company to Saudi. The other something I think that was a massive lesson learned is that you're right. Egypt is very different. Like Egypt is a population of 100 million, actually above 100 million now. You can build an entire fund around Egypt alone, but you can't build an entire fund just around Tunisia. It doesn't make sense for multiple reasons. One is depth of the market, but then also the founders find themselves that they very, very quickly need to expand because the market is so small. Now, if you have a regional fund, then you can do that easier, right? You can say, I've found the best founder in Tunisia and I can very quickly bring them to Egypt rather than have to invest in their counterpart, which is Egyptian, but maybe doesn't actually have as good a skill as the Tunisian. And so I think the general, I mean, I think Flat6 Labs and then now F6 Ventures have gone through 3 sort of phases of our product development, like sort of journey. One was just the testing and building the core, which is our ability to deploy and support companies at the seed. And then the second was taking that to become institutional and doing our sort of first 5 institutional funds across the region. And those were country specific because I feel the nascency of the markets meant that we also had to be ecosystem builders. And so that's why we created those country specific funds. I think now it makes a lot more sense to do those regional mandates that you're able to diversify across sort of somewhat risky markets, which are the Middle East, but also do much better portfolio construction in the sense of being able to take the best player in any of those, what we believe are sort of synergistic markets, and then very quickly expand them across rather than do multiple bets in multiple countries.
Yeah. And I think, I notice this a lot with a lot of funds that say that they invest in MENA, and sometimes they say MENAP and they include Pakistan in that. But oftentimes that feels like a very monolithic strategy. So I'm curious for you, from your perspective, and you have partners that are, from the countries that you guys are investing in, right? You have people that are covering Levant that are based in Jordan. You have people based in the GCC and are from Saudi that are based there. And so curious for you, what do you think investors get wrong about investing in the MENA region?
I think definitely this notion that it's one country, which is not true, right? And unfortunately, actually, the barriers for companies to set up or to sort of cross borders from one country to the other are actually quite difficult. And so a fintech company that starts in Egypt would have to start all over again if they move to Saudi in terms of licensing, in terms
especially
of
Saudi, right? Because it's so highly regulated.
Because it's exceptionally highly regulated. And then Egypt is as well. And then similarly, the UAE, I mean, maybe the UAE has a bit more sort of openness to financial technology. But I think that's the number one thing. It isn't as straightforward. And the second thing is for B2C products, it really varies massively in terms of go-to-market strategy, how you target an Egyptian market versus a Saudi market versus a UAE market, which is sort of so international. And so these are 2 things that I think many investors don't understand. In making investments. And then the last thing, this notion that you can invest in an Egyptian company, but then bring them to Saudi and assume it's a plug and play is not true, because it takes a lot for founders to set up in Saudi. And even though Saudi might be a very lucrative country in terms of B2C, it's also a very expensive country. And so sort of to finance an Egyptian company, but ask them to then expand to Saudi with a very different cost structure is not very smart. And
I'm curious about, what are the opportunities right now in, where you're investing that you wish founders in the region were addressing more? What are the spaces that you still see that are really wide open?
So I think that the issue is that we don't have enough dry powder in Egypt for the magnitude of what Egypt is. And I think that causes massive issues, because most of the sectors that I believe needs much addressing are the sectors that probably require a fair bit of an R&D. And so they probably require a bit of a longer route to commercialization. And I feel like because of the lack of dry powder, there aren't enough investors that have that patience to say, we could look at a deep tech company or a company that sort of requires a lot more of R&D to invest in those. And they want faster companies that can show sort of appreciation, value appreciation, which is an issue. But if I'm to look at genuinely what the country requires, I still think financial inclusivity is a thing. I just don't think that lending is the way towards financial inclusivity. But then I feel like education is a sector that's extremely underserved and sort of unaddressed at large. Health tech in Egypt and health, sort of the entire health sector could require a lot more advancements. So for example, we're looking at a company in Tunisia that has created a wearable that detects bowel movements to help support on post-operative complications, which do sometimes happen in terms of digestive systems. Now, is a company that I look at, I know that there's still an R&D phase. As a seed investor, it's a company that I would love to do, and I will do if I could. But I know for a fact that they would struggle in terms of finding the follow-on funding post F6 Ventures because there aren't enough growth investors that want to take that risk on sort of high deep tech companies. And so I think, but these are the things that we would love to see a lot more, right? Things that help with health, with sort of operability, with detection, because I mean, we are a region that still has massive issues in terms of blood pressure, diabetes. It's a region that has in Egypt, we still have issues, for example, with Hep C and detection of Hep C. So there's a lot to do in by way of health and edutech, which I think is very important for us. And definitely, I think there's a lot more to do in terms of renewables and climate. This tends to be extremely I think it tends to be disrupted a lot by massive sort of subsidies that happen on oil and gas, which makes the economics not work. But definitely it is something that we need to address. But these are generally the sectors that I feel we need to focus on. I think B2C in Egypt doesn't fly, and B2C in most of North Africa. I think B2C is very particular to Saudi and the GCC because of the purchasing power. But if you look at MENA and Africa, the wider MENA and Africa, it's either I love B2B solutions as well because these are monetizable. You have a clear market, and you have sort of, you can see a revenue generation very fast, and you can also expand without needing to set up elsewhere very fast.
And you know, it's so much of what you said was really resonating with me for what we've learned in Pakistan. So I think, you know, just the crossovers are interesting, and also just what you were saying too as a VC, like, you know, we're in such a specific asset class where it's like companies need to raise follow-on funding. We're in a high risk asset class because obviously, you know, we want to see that upside, and that upside we ideally want to see like a pretty high X and multiple on that investment. So sometimes it's a challenge of like what we deem as like, this is a really important problem to solve. Whereas the solutions that are solving it may not be the right fit sometimes for the asset class that we're in. And sometimes I always wish I'm like, have the secret thing. I'm like, I'm going to make, inshallah, a ton of money, and I'm going to be an angel investor and invest in these solutions where I'm just like, I really just believe in it versus something that fits what is the requirements of, you know, from a VC perspective.
But it's also sad, right? Because I feel like we're trying to do VC in emerging markets, but we're still trying to do them like private equity with extreme risk averseness. We only want to do things that we fully understand, and rather than sort of push the mark, which is what venture capital across the globe, you know, does.
It's supposed to be non-consensus. I'm curious for you about the Egypt market, right? Because Egypt has had a lot of success over the years, but then obviously had like a macroeconomic challenges that might have dried up funding relatively more recently. And so I was just reading that it was announced recently that Egyptian startups raised 254 million in funding in the first 8 months of 2025, which is a 17% increase from the same period last year. So things might be looking up, but that's what I want to hear from you because you're on the inside of this. given that you went through this crisis, it might have impacted funding numbers. Though what I was reading before is that M&T Helon had raised such a big round that people may have didn't realize it didn't really affect that big end of year number. But I'm curious if you see that shift really happening back now in terms of money flowing back into the market. What is the behavior that you're seeing in terms of the startup ecosystem? And how does it look now compared to before?
It unfortunately isn't necessarily flowing back. I think there's a lot of the FDI that we got into venture capital came from neighboring countries, and many of them have lost. And the problem is that you had a situation in Egypt whereby, I mean, venture capital is a dollar-denominated industry globally, right? And so transactions would happen at the dollar value, and you would see, it was such an unfortunate case where you would see a company that is still in real terms growing, right? But then just because of the devaluation, what it meant is that company is below what the last valuation was, or below the last transaction valuation, which meant that for a lot of the sort of the VCs that took massive bets on the Egyptian market, they're in the red, which is unfortunate. And so it's unfortunate, but that also coincided with a lot of the regional venture capitalists having very nationalistic mandates in terms of most of the funding, in terms of one level above from their LPs, is sovereign money that has sort of nationalistic mandates and KPIs, which meant that there's less money coming from abroad towards Egypt. And unfortunately, this was not balanced out by enough venture capitalists in Egypt having dry powder or being able to close. And so unfortunately, the market in Egypt, I think the last 18 to 24 months hasn't been as good. I think there's a slight correction. There's been a slight correction in the last 12 months. Not enough to say we're back to the 2020 levels. And I think despite the fact that the value has gone up by 17%, if you look at the number of transactions, they're still way, way below what we've recorded the last few years. And I think that's the scary bit, because even if you look at the transactions that are happening, they're all happening at sort of the Series A. The seed has seen a massive dip. And the problem I always say with seed taking a dip is that you might not see the effect of it immediate, but you see it in the next year and the following year, because these are sort of the pipelines the pipeline that feeds the entire ecosystem. So I think Egypt isn't completely out of the rut yet. I'm hopeful that there are a few funds now that are in final stages of sort of raising and hopefully closing. So I look forward to having a lot of that dry powder coming into the region. But also I think what has been very key, and I think maybe goes back to a question, Kaz, you've mentioned earlier, which is, where does Egypt stand? It's actually very interesting in the last 12 and 18 months that a lot of the Gulf money that had dried up was actually replaced by sub-Saharan Africa VC funding coming into Egypt. And I think we're seeing that trend a lot more, whereas the sub-Saharan VC ecosystem used to be super sort of segregated or maybe not segregated, but so distant from the North Africa VC. This now is really changing. So all the sub-Saharan sort of fund managers now have a mandate or an allocation towards North Africa, and actually more and more, all the North African-based venture capitalists are having a sub-Saharan allocation as well, and so that's exciting. And I think that's a lot more of a natural progression in terms of how do I see sort of startups being able to expand.
I love that. And I'm curious for you, like, as we're thinking, because I love that you said that of like, not just, because we keep thinking about, and even I just was so guilty of that, of like Egypt and the Middle East, but we brought this up in the beginning. It's like Egypt is also Africa as well. And so seeing kind of that back and forth of not just you guys looking at the rest of the African continent, but the sub-Saharan VC is also looking at Egypt as a market to go to next. And curious for you, like, what does the future look like, in the next few years? And how do you see F6 Ventures kind of being at the forefront of that?
So I think the identity crisis for Egyptians continues through F6 Ventures, right? I think we look forward to being, for better, for worse, this identity has been one of Egypt's strengths on multiple levels, right? That connection to Africa, but then to the Middle East. I think for us at F6 Ventures at large, we're very excited about doing bigger. Now, we've had our role in terms of sort of supporting ecosystems the last decade. And I think the next chapter for us is to focus a lot more in terms of creating those coherent funds, well-balanced funds, well-sized funds, being able to do multiple checks to sort of support companies. I think we realize how the market and venture capital across the world took a hit. And so I think, maybe I've been too harsh on emerging markets, but I think if we take a step back, the entire venture capital sort of industry has taken a lot of setbacks in the last 3 years. And so I think it's only natural that when it trickles down to the Middle East, which is an even riskier market, it's understandable that the hit is even bigger. But I think there's a lot that's coming on board that I'm very excited about. I mean, despite the fact that I believe the sort of the funding coming into Egypt from the Gulf is dried up, I think there's still money that it's not fully dried up, but I still think there's a lot of government effort towards supporting the industry, which I'm very excited about. I think for F6 Ventures, what we want to do is keep building those funds, try to connect startups more. The fact that we're headquartered in Egypt does give us genuinely that advantage, whereby even if I'm creating an Africa fund, the fact that I have partners and presence in the GCC still means that if a company is sort of is ready to go outside of Africa, we have that connection to make. I like the fact, I think what we want to do is sort of through that partnership be able to create multiple funds, but genuinely have the partners that are able to sort of have the skin in the game and the alignment with LPs to sort of manage each of those funds independently and fully. And so it's an exciting chapter. I think there's still so much to do in terms of by way of seed and pre-seed investments in the region, being Africa or the Middle East. And I personally still think the need is more than ever, and across the two markets for different reasons. Maybe in Africa because we just don't have the pipeline, and I think in the Gulf and the GCC at large, I think it's because there's so much demand that you constantly need more, and there's the market. And so I think super excited about the next 5 years. Seed remains to be, I think it's, in my opinion, I think despite contrary belief by LPs that seed is a more of a risky sort of asset class than growth, I disagree.
Me too.
Because I think you get a lot more of a diversification, but then also you have actually a lot more resilience in emerging markets to shocks, economic shocks, because you're always able to sort of do that first transaction at the current terms and at the current like sort of economic status, whereas a lot of the times the growth investors are very shackled by prior transactions that happened at different times and at different dynamics. So yeah, super excited about the next 5 years and
yeah, and I love that point, right? Because emerging markets and VC, I actually personally think that we haven't, like, we're still kind of at the new, like, early days of it, because, and you and I've noticed this just generally about, like, as we talk about companies that are coming up, and it's kind of the thesis of this podcast, right? Is that everything that we're seeing happen in emerging markets is happening very similarly across every market. And I think in this first wave, you saw a huge photocopy effect of companies that were like the Klarna of, you know, Egypt or the whatever, or like Uber of X. And now this new phase is like, actually, I'm much more like, there's much more of a comparable between Blink in Egypt and Kisbazar in Pakistan, which are more similar and adapted to their local nuance, rather than if they just photocopy Klarna. We know this because we've seen so many buy now, pay later deals fall through and not work. And it's because like they tried too hard to be like the West. And so I think as we have more emerging market VCs kind of realize like the similarities across us and see those playbooks as similar, I think hopefully that'll lead to a lot more interesting results in the near future. But I want to say thanks so much to you, Dina, for joining me today. And I really thought this was great, and so many interesting learnings that you've had for all your years of experience in the Middle East and also covering Africa too. So thanks for being here.
Thank you. It's been fun. Thanks, guys.
That's all we have time for today. Thank you so much for, listening, watching this episode with Dina, who's incredible and super inspiring and thoughtful about what they're building and what they're doing at F6 Ventures. Please like, subscribe on all podcast platforms that you watch and listen to your podcasts. Please spread the word. We're obviously just like a very small little operation that's coming out of our fund. And, sometimes you do feel like you're kind of screaming into the ether, but I love that my shout out to my father-in-law listens to every single episode. And so thank you to Jim for doing that. For everyone else, I super appreciate all your time, and we'll see you next time. We'll be bringing back kind of our regular format for the next episode. Bye.